Right, I think we should start. So welcome everybody, Happy New Year, wherever you are in the world. I hope you're all fit and well. First webinar of the year, and I'm delighted that it's IP Global. Many of you know that I worked for IP Global a couple of years ago for 9 years, and a great company, and love working there. They're innovators. I think you could probably fair to say they were trailblazers in the year of starting this type of business. So I'm really pleased to have them on. And just to introduce you, Grant Reynolds. Grant Reynolds is Director of Wealth Management based over in Hong Kong. Jeremy looks after the UAE, so anybody in this part of the world, Jeremy's your man. And Stacey, who's the investment manager. And that incorporates, she's the expert in all the properties that IP Global deliver. And so everyone's going to have a turn at speaking. Please do ask questions as we're going along at the bottom of the tab, because we want to make it as interactive as possible. And we don't want it like a lecture. We want people to be interactive, ask questions. I know there's a lot of new people to Holborn on today, which I'm delighted about. So without any further ado, over to you, Grant.
Thank you, Chris. Yeah, good to see you, and good to see Jeremy and Stacey here in Hong Kong with me. I've got the jumper on because it's pretty cold here in Hong Kong. Yeah, let's bit of background to myself first. I've been in the business since 2006. Live in Hong Kong here with my wife and son, and I've helped clients invest over sort of $250 million US of property since I've been in the business. And yeah, I'm really pleased to be talking about the Birmingham side of the investment with of IP Global with Stacey here today. I'm just going to first of all start off with the business model though. So let's get into the first slide and just give you a little bit of background to IP Global. So the business model is very unique. We're not a marketing agent. I think that's key. We actually underwrite our deals. We actually commit our capital. For those of you listening in who haven't heard of IP Global before, you know, we commit capital. Whatever we don't complete on by completion, we have to buy the unsold units. So we're very selective on the projects we do. And it's really testament to Stacey and her team, who look at the best of the best in terms of where we commit our capital for these deals. I think what clients really like about the model is the fact that when we say, you know, we believe in these opportunities, we genuinely do. We have our capital involved. You know, we've got skin in the game, and that's very important. So lots of research and due diligence at the outset. We very much less is more. Very much it's about bringing those key projects for clients in city centres, effectively across Europe and the UK, as you'll see on the slide there. When a client does invest with us, we do everything in terms of the end-to-end process. We make the process as simple as we can. So that goes from introduction to the lawyer, so the client doesn't have to worry about finding a lawyer. We can assist on the mortgaging side, helping the client to get the financing for their investment, and also the lettings and management side. We have our own lettings and management business, which is very established. For example, we manage 2,000 plus properties in the UK. As a business, we've transacted $3.2 billion US of property since we set up across 30 markets. So we're very established. So in terms of where we're going to focus on today, so there's a slight change. We're going to focus on Birmingham and Newcastle. I'm going to cover Birmingham. Jeremy's going to cover Newcastle. The reason why that is, Chris, did you want to interject?
I was going to ask, yeah, it was builders Leeds, for anybody that was tuned in, especially for Leeds. I believe that is coming up, but you were a bit selective, a bit argumentative, and were negotiating hard with the developer, and therefore we're going ahead with Newcastle, which is great.
Yeah, exactly. So basically, you know, we was unhappy with a couple of details. We weren't happy to push ahead. You know, we're only going to launch if we're entirely happy and comfortable. And as I say, we put our money down. And there's a few details that we're just not happy to move forward with. So in effect, we are still reviewing the Leeds market, but we've basically fast-tracked the Newcastle project. And the reason we've been able to do that is because it's with a developer that we've worked with twice before. We're very comfortable with them. We've got a great relationship. and obviously Jeremy will share more as we get through, and that's a very exciting opportunity. So yeah, that's where we are on that, Chris.
Thank you.
Did you want to ask anything else at all on that particular slide, Chris?
Well, I know there are guys, I got a question yesterday from one of the guys in the office about Glasgow, but why, and hopefully questions are going to come in from people listening, and I can see we've got Portugal there, and we've got an actual, one of the passport guys is tuned in as well. So yeah, there's a lot to go through, but should we stick to the script and talk about where you're going at the moment and why Newcastle? I don't know Newcastle, I've never been there. But what are the driving factors maybe?
Well, I don't want to steal too much of Jeremy's thunder, so I'm going to let Jeremy obviously talk about that. I mean, there's lots and lots of positives. Obviously, I'll catch on Birmingham with Stacey here. But yeah, I mean, it's good that we've got that slide up just to really sort of share the fact that obviously, aside from the UK, if clients are looking at diversification into different currency, there's some really great euro opportunities that we've got. Obviously Porto and Lisbon, Portugal, you've got very, very low interest rates. We've been getting rates of actually around about sort of 0.88%, yields of about 5%. Germany, great, strong and solid. If we're looking for very boring investments in today's world, dull and boring is good. And that's definitely the case with Germany, but very, very strong and solid and great tax advantages and a good legal structure, and the process works so well. So there's some really good opportunities aside from the UK that we have in the Eurozone, and certainly if all the guys are keen to get more details, we can share them at the appropriate time. But perhaps at this point I'll get into the Birmingham presentation on my side. So just before I do that, I think it's good just to sort of take a step back over the last year. If we look at the UK, obviously lots going on. COVID aside, it's been a very, very interesting property market. I mean, if we go back to sort of January of last year, post the election, we saw a big bounce in UK property. We had a very, very strong 3 months. There was sort of political certainty after lots of ebbing and flowing over the past few years with the sort of Brexit negotiations, etc., and so on, and the referendum. Fast forward to sort of Jan, Feb, March, they were very, very strong when that certainty that there was a Conservative government with a big majority was pushing ahead with Brexit. So that presented a lot of confidence. Then, of course, we got to March when COVID struck and the market sort of was put on hold for a couple of months. But since the sort of May, June time, we've seen a very, very active UK property market. We've seen record low interest rates, which is a strong indicator of obviously affordability, and that's really been a catalyst for a lot of buying. We've seen the stamp duty holiday, and then of course once we got to the end of the year, we've sort of finally seen those Brexit negotiations concluded. So Brexit has obviously come off the table from a risk factor of last year. Of course, in the US, we've got Biden coming in. Obviously, Trump will go out kicking and screaming over the next couple of weeks, but he's going. But seriously, those risk factors are coming off the table. So in effect, we can start this year in a very positive note. And if we look at the next slide, actually, just to sort of touch on from a currency perspective, I think it's interesting when you look at obviously GBP. What we've seen over the last few years, we go back to 2014, it was you get one pound for 1.71. We've then seen the pound really start to sink over the last number of years. If you go back to March of last year, it was £1 equals 1.116 USD, and now we've seen the pound starting to uptick in the last recent weeks. Obviously, post the Brexit deal being done and that sort of certainty returning, and therefore, I think the other factor now is people getting into the GBP. We would look to see the pound strengthening over the medium term as more certainty is starting to return to the market. So with that, with obviously low interest rates, an undersupplied market, etc., And the thing I haven't mentioned is the fact of, obviously, and we're going to talk about this, is the high level infrastructure going in across the UK. Obviously, we've got HS2, the new high-speed rail link that was announced in January of last year, which has probably been lost in a lot of the noise. And that's going to drive a lot of growth and jobs in the regional cities. And of course, in Newcastle, and again, I won't steal Jeremy's thunder, but there's a lot of regeneration going on there. You know, that's another factor that's going to be very, very positive for the regional cities. So let me move on actually to Birmingham itself now. If we just flick over to the next slide. Oh, sorry, apologies. I've stolen your thunder. It's actually Newcastle. We're going to start with Newcastle now. So Jeremy, let me hand over to you, and I'll let you roll with Newcastle. Then we'll come over to me.
Yeah, no worries. End with a flourish with Newcastle, Birmingham, obviously. All right, hi everyone. And I'm glad you all come and join us today. Yeah, I'm basically going to talk a little bit about Newcastle today, which will be a little bit new for some of you. It's our first project in Newcastle, but one we're very excited about. It's a market we've had our eye on for quite some time now. And I think for anyone who specifically actually tuned in today with Leeds in mind, I think unless you probably had any of our clients who maybe had an emotional tie to Leeds or reason there, I think for Newcastle is very comparable to what investments in Leeds will look like, basically in terms of headline value, the size of economy, growth projections, and essentially how much money a client will need to get into an investment like this. So we'll talk a little bit more about this, but importantly, why we as an investment company want to buy into this city now, whereas we have been looking at it for the last couple of years. So considering we think that Newcastle will be very similar to some of the other northern cities. What we're looking at here is a 5-year projection currently for Newcastle to be about 21.7% over the next 5 years, and the story for this growth is a current booming economy and then a fast population growth as well, which are really driving prices up for the lack of property supply. So Newcastle is the 8th biggest metropolitan area in the UK. It's got great access both with rail going back to Edinburgh and to London. You can actually by water as well, get the ferry over to some European destinations, and it's got direct flights over to most of Europe, and you can get over directly to Dubai as well from the airport there. But affordability wise, it's one of the more attractive kind of major UK cities in that respect. It's got an affordability ratio of 6.57, which basically means the average annual wage of someone who lives there compared to their property prices, and so 6.5 is a lot better than most of its competitors. Say, Manchester, Leeds, Birmingham, they're all more around the 7.5, or if you then went to London, it might be more like 13, 14, 15 times. So it means that more people in the local vicinity are able to transact and buy that property, basically, which helps us with the buoyancy of the market, and one of the reasons why we want to go there. And so coupled with that, and then the lack of property coming in, the rental demand is currently 110% of the rental supply. So equally, this is really helping to push the rents up, and in turn then will push the prices. So in terms of the economy then, for this slide and the growth overall, we've got a projected population, 2.75 million by 2030. That's for the kind of wider regional area. Newcastle city centre obviously is a few less than that, but really, the area around and is all those people are the people who'll be working within the city centre itself. So we've got job creation since 2015 being almost 75,000, and then a really healthy job employment growth target over the next 4 years up to 25,000 again. So how this is happening is the GDP growth. The Oxford Economics did a study in the last accounts were for 2018, and that's 26 billion for the Newcastle GDP, and that was 37% growth since 2000. So it had been doing very well, but actually the expectations are what really exciting. So what they're hoping for, expecting, is to be the general GDP of the area to be 43.8 billion by 2035. So over the next then 15 years, 14 years or so, that's an 83% rise over that time. So what we're really seeing is the speed of inward investment, and this hot pot, melting pot of everything that's going on at the moment, which going to lead to higher growth. So it's not just what it used to be as a high yield market, it's now going to be high yield and some really good capital growth for it. So city itself, most of the most exciting jobs and so forth are around tech. We've got IT, digital and life sciences, but also it's a decent education city. University cities are often what we look for, and it's got 2 major universities, or 5 within the short commutable distance, and that's in terms of the university sector, that's almost 42% increase in numbers of students there since about 2001. So it's had a big boost over the last recent few years.
Interesting. Interesting. You mentioned universities. I guess you're talking about lecturers and professors that would be looking to rent. And when it comes to the tech companies, you're looking for the professionals there that want nice, high quality places to live, and probably when it comes to location, where their type live, if that makes sense. More people from the tech, they all get together, they you know, forget COVID, get together and have a chat and enjoy each other's company. And I think when it comes to our guys at Holborn and our clients, they are, one of the questions you get asked is, how quickly is it going to rent out? What is the demand going to be like? Because people don't want a void period. So all that you said there, Jeremy, makes sense to me.
Yeah, exactly. You want the safest rental property you can get, and so everywhere we look, whether it's Newcastle, Porto, Berlin, Leipzig, London, anywhere, it's always with the same principles in mind. We're always looking for that kind of, we're not looking for your average student, maybe international students, because there's quite a lot in the local area here. They might be good renters for this. This is a high-end, local rental property, but at a good price. So we know it's going to rent every day of the week, which is in turn what makes it a safe and solid investment over the long term, and we therefore will see good price growth. But yeah, local city workers who can walk or get a bicycle ride to their the major job centres in town, that's what we're looking for here basically, and that's why the accessibility is that good. And you can see on the map here in front of you there, largely I'll talk about the regeneration now, but it's the orange marker there, that's where the property is located basically, on the south side of the river there, and so it is very accessible for renters to the city centre there. So but yeah, lots and lots of, the last slide showed some of the headline companies in the region, about 50,000 different companies, and lots of big international brand names and so forth. So these are the kind of guys who'll be living and working in the area, and then yeah, maybe international students as well might take it. But for this slide, what we've got here, those red marked areas, this is some of the major regeneration going on in the area, and anywhere we look at, regeneration is a huge focus. We want to know a place is going to be fundamentally different in 10 years than it is now. So what we have in Newcastle is a what they call the devolution deal. That's essentially trying to make Newcastle, North Tyneside and Northumberland areas all be governed by one central mayor, which has been split up. And so actually that's following the same kind of pattern model as we've seen in Manchester and Liverpool. I think yeah, Birmingham's done that as well, and that's been enormously successful over the last decade in terms of control, municipal affairs, encouraging inward investment, and so that's why we've seen such success in places like Manchester over the last while, and obviously we've seen good price growth there. So if you want to get into what the prices were in Manchester 10 years ago, pretty much, this is what Newcastle offers, with the the upward potential of getting in cheaper or more affordable prices. So in terms of this regeneration, the projects we've got in the centre here, Newcastle Helix project, that's one of the biggest of this local area. So that's a 350 million project that's going to create about 4,000 jobs, and that's going to centre around commercial, a bit of residential, but a big data centre is going to be there. Stevenson Corsa, that's a 200 million development, that's offices and retail. Just opposite where our project is, or just beside the project, is Brett Wharf. That's a smaller 41 million project for residential and restaurants and so forth. But all of these, this is all about regeneration, making a much more iconic, much more kind of livable, lovable space. Newcastle Quayside and Giants and the Quayside, that they're city centre, river fronted properties which are going to be very attractive, based around tourism and livability and leisure. And so it's the kind of thing we love to see as an investment company, because it is majorly going to change the face and the look of a city over the next 10 years, and that's what drives money in and people to stay, and prices eventually then to go up. So we go to the next slide then, in terms of what we've actually got here. So Arc Avenue, this, as Grant said before, one of the things I love about this particularly, it's a developer we've worked with before who's just very reliable. You know, they've delivered on time and exactly what they said they would, and it's a project which is probably the most entry level we'll get into the UK, but you know, in a very, very well located area of a up and coming city. So we've got 29 units for IP Global, ranging from 1 and 2 beds, but the prices here are going to basically range from 122,000 up to 182,000, and that includes car parking spaces. So with a 20% deposit down now and then nothing until completion, that helps a lot of clients basically to kind of balance out their payments, which, so you know, you're potentially looking at, you know, anywhere from probably £30,000 down now and then nothing until September later this year. So not a long build time either. So half of it's refurbishment, half of it's new build. So if someone has particular focus on what they like with that, you have the choice. But you know, fundamentally, price per square foot for this project, for this location, it's hugely attractive. And with the rental yields being almost up to 7% in this project, that means it easily covers the mortgage payments and then gives some extra cash into your pocket each month as well. So yeah, that's Newcastle and what we're looking at for the time being. And I've probably gone on far too long for this one, but I'll pass back over to you, Grant.
A question's come straight in there, Jeremy. You didn't mention purchase price. Are we leaving that for Stacey?
I did, but I'll say it again. So you've got the 1 beds start at 122,000. I think is the most expensive around about 136, Stacey, I think, and then 2 beds can go up to 182,000.
Yeah, and all including parking. All units do come with a parking space,
which is great. So really we're talking about, let's just say for a 1 bed, somebody having 30,000, as you say, and mortgages up. I always tell people 65%. Would you agree with that, Stacey?
Yeah, and I think also something to note probably on the prices. I mean, if you take it down to price per square foot, just the apartments, you're looking at 216, which I mean is incredibly competitive. You're not going to find much for that price. I mean, you can barely build for that price now. So yeah, I think very, very attractive. And as Jeremy said, with all that, you know, regeneration going on, the students in the universities are going to want to stay in the city after they've studied. That's why companies are moving there to sort of pick on that talent as they graduate. And I mean, this is just a great place to live. It's affordable. It's on the riverbanks, and yeah, well, just great.
Over the years, I've known people that have gone to university there, and everybody loves Newcastle. As I say, I've never been there; it seems too cold to me. But everyone seems to like Newcastle and its nightlife after COVID. Yeah, thanks for that. You do look like Good Morning Great Britain sitting there, but over to you.
Thanks, Chris. And now it's definitely Birmingham. So we'll get stuck into Birmingham now. So I think the first thing I'd say about Birmingham is, you know, I went back there about sort of 15 months ago, having not been there for many years. And I had a very, to be honest, a negative opinion of Birmingham from when I was there 10, 15 years ago. It was drab and dreary. What I saw when I went there was a city that's really starting to change, evolve, grow, lots of regeneration going on, and basically, you know, left sort of full of excitement, really. And I think what's interesting with Birmingham is that the regeneration to me seems to have happened a lot later than it has in Manchester. I mean, Manchester we've seen evolve, grow, regenerate to the point where there are some projects in the centre of the city that's sort of 550, 600 a square foot now. Whereas, yeah, Birmingham, we're talking about half of that pretty much. And obviously it's the second largest city in the UK, and it's the closest to London. So we definitely see this as a great opportunity in the region. So let's move into some of the detail. So basically, as a city, second largest economy, just under 40 billion. So huge economy. I mean, really, it's kind of sort of carrying on the sort of North Shoring as we see it, the sort of northern powerhouse, the sort of over the last sort of 5 to 10 years, where government is encouraging corporates to to sort of move out of London, de-risk London, spread the growth across the UK, such as Newcastle that Jeremy was talking about, and the other regional cities. And so we've seen some big employees start to move staff up to Birmingham across the various regeneration spots there. So, we've seen, for example, 81,000 jobs created. We've seen the big banks, HSBC, Deutsche Bank, Barclays, moving big amounts of staff amongst a whole host of other corporates in recent times. So if we move into the next slide, so yeah, big city, big population, biggest outside of London. We've talked about in previous presentations the fact that the UK is typically undersupplied. So that's definitely the case again in Birmingham. The fact is, as more and more people are sort of moving into the city, sort of relocating from, for example, London, we actually see the amount of supply going up over the next number of years. I mean, over sort of 2021 to 22, right the way to sort of 2030, 31, an additional 100,000 plus households will be needed. And of course, that supply be demand imbalance is ultimately very healthy for property prices. So if we move into the next slide, please. So, let's sort of drill into a little bit of the detail. So I mentioned earlier on, so HS2 was sort of formally announced last year. There'd been a lot of talk about it for many years, and it was formally sort of signed off and agreed, and it's going to impact right the way across the UK. In Birmingham, of course, it's significant because it's closest city to London. It's going to make London in sort of 45 minutes once it's done. So when I think back to when I first started working in London, my commute was an hour across London. We're talking about 45 minutes to get into London from Birmingham. It's commutable. And in this new world where perhaps people are working from home a few days a week long term, and then a couple of days in the office, in effect, you could live in Birmingham, you could commute into the office in London a couple of days a week. So it really does fit the new world. From a high level perspective, I mean, there's a lot of high level planning like Newcastle that's been going into Birmingham. So they've got the 50,000 jobs of the big city plan over 20 years. Obviously, we've got the picture there on the top right of the new station planned, and the HS2 is one part of the bigger jigsaw. It's associated high level infrastructure that's going in alongside that and bringing lots and lots of jobs and growth. And certainly in the world we live in right now, these high level government infrastructure projects take on more meaning, more purpose, and employment is very, very important. So we see them absolutely sort of committed to. So obviously we're going to move into the actual project in a minute, but just on that slide, so just sort of picking out a couple of things. We've got the project at the green spot just at the bottom there, but across the city you've got Chamberlain Square, lots of big sort of regen spots. The project we've got is in Digbeth, which is very much like a Hoxton Shoreditch. It's a trendy up and coming area. It's an area where we have what we call a custard factory, which is an old custard factory, which is now a real sort of hotspot for design, tech, media, etc. Lots of jobs being created there. And as I say, when I was in that spot and when I was walking around and looking at the new Bullring, the new sort of shopping retail outlet, the Mailbox, which is another big retail outlet, what's happening around the old sort of New Street station, all the trendy bars and restaurants, and the fact that there's more Michelin restaurants anywhere in the UK apart from London, it's changing all the stereotype of Birmingham by far. It really is a city that is going places now. So let's just move into the detail of the HS2. So this is really sort of exemplifying the great position Birmingham holds. I mean, from a geographical perspective, right smack bang in the centre of the country. So if companies are based there, if they want to get access to regional offices across the UK, HS2 will make that access very, very quick. In effect, from Birmingham, you're going to get into London in 45 minutes. You're going to get into Leeds in a similar timescale in 49 minutes. You're going to get into Manchester in 40 minutes, and obviously right up to Glasgow and Edinburgh. So it's in a fantastic geographical spot to really take advantage of when HS2 does come on board. Right, so this is the project, and I'll hand over to Stacey, who will share the specifics of the detail. But just very simply, we've got 74 units here. This project, for those who are looking for a longer lead-in, it's a 2-year build, so works very well if clients are looking to secure the pricing now. Just put their 15% in and ride what we see as good growth over the next 2 years. It's a very good developer we're working with. The contractor is the main contractor on HS2. It's a long lease, and we're looking at yields of around about 5%. And here it's very close to the HS2 metro station that will lead into the HS2 at Curzon Street. So really good connectivity on the doorstep. And in effect, if you're buying a 2-bedroom unit here, you could have one person who actually works in the centre of Birmingham and one that actually commutes into London. That's very realistic going forward, for sure. So I don't want to steal any more of Stacey's thunder. I know she's chomping at the bit.
I don't know what I'm going to say now.
So let me hand over to Stacey, and she'll add a few comments just to some of the detail here as we move through the presentation. Thanks, Stacey.
Perfect. Thanks, Grant. Joe covered most of it, actually, so I'm going to have to find some extra new fluff and flowery details to share. Yeah, but I mean, we're obviously excited to be back in Birmingham. This is our 4th development now in Birmingham. As Grant said, it just is constantly changing. Every time I go to Birmingham, you walk into Digbeth, you just see the change, you see the activity that's going on there, you see the regeneration, you see the development. It's just busy all the time, and you can see how this is going to be a place that people want to live, you know, in the next 5 to 10 years, and how it's just going to completely transform the Birmingham city. So I'll get onto the area in a bit more detail a bit later, but just looking at the development, obviously a really nice looking development, new build, very high spec. It'll consist of 130 high specification apartments. As Grant did mention, we'll have 74 units exclusively. The other remaining units will actually be held by the developer. He's either going to sell them only on completion because he believes the prices will increase and he'll be able to sell them for over the £400 per square foot mark. At the moment, we're on average at £381 per square foot. So yeah, he's holding a bunch of the units to sell on completion, and then he's also going to hold a lot of the units to rent out through their company, because he thinks it's going to be very attractive on a rental basis too, and that they can earn obviously good rental income from that. So great developer, yeah, obviously in it with us, which is always great, and very good mix, I think, of 1 and 2 beds. Yes, Chris?
I did encourage people to ask questions as we're going along, and so I hope I haven't broken your flow, but how do Birmingham Newcastle differ from an investment perspective? You already said about timelines. I would say that would be number 1. How would you answer that?
As in the projects?
Yeah, how do Birmingham Newcastle differ? Yeah, your investment projects, yes, between the two.
Yeah, I mean, they are, they essentially are different buildings, right? Newcastle is a refurbishment, whereas Birmingham is a new build development. As Grant also mentioned, the completion timelines are very different. So if you're looking for something to complete this year and start earning rental income this year, then Newcastle is obviously the way to go. Birmingham is more of a long-term play, so which completes in 2023. And also I'd say maybe the payment structures are slightly different. In Newcastle, you have 20% on exchange, and Digbeth, you have 15%. The reason for that slight difference is because the prices of Digbeth and Eastern Green are higher than that of Newcastle. So if we try and bring down that exchange deposit, so clients don't have to put down as much equity on higher priced units.
Thank you for that.
Sure.
Any more questions? Please keep them coming in. Sorry, back to you, Stacey.
No, that's okay. I've just got sort of two more things to touch on the slide. So firstly is just you've got your concierge. So for tenants, they always like to have that sort of flashy concierge feel in a development, and also the rooftop gardens. So tenants can also enjoy the rooftop gardens as an amenity. And those also don't bring the service charge too high. I think a lot of times, people want these bells and whistles on developments too, because they look good, they're easy to tenant, or they think it's easier to tenant, but it often brings up your service charge by quite a bit, sometimes over £3 per square foot, where here we're looking at about 1.6 per square foot. So very, very reasonable and very in line with sort of what's in the market. And then another thing I'd probably just touch on, which is quite important, and I think a lot of people often overlook, is the ground rents. So, I mean, a couple of years ago, you wouldn't even think twice really about this. Whereas now, lenders, I mean, they're becoming more and more strict pretty much about everything. But this is one thing that they're really nailing down on. And they will not lend on developments that have a ground rent of higher than 0.1% of the purchase price. So, I mean, that's sort of, Grant mentioned earlier about leads and having a bit of difficult in negotiating some points. And this was actually one of them. So, there's some things we just won't move on as a company because we do have skin in the game and we're in it till the end. Whatever we don't sell, we have to purchase. So there's things like this that we won't move on. And, if this is the industry accepted amount, that's what we'll get for all of our clients. So I think that's a very important factor that a lot of people don't think of, but it's something you should definitely pay attention to.
Yeah, I agree.
Perfect. So should we just move to the location? Okay. So Grant mentioned it's in Digbeth. So Digbeth is actually quite an exciting part of Birmingham. I don't think Grant would have ever thought someone describing Birmingham as exciting. But yeah, as I said, whenever I go there, it's constantly changing. I mean, it's getting a proper facelift, Birmingham, and especially Digbeth. I mean, recently named sort of the Shoreditch of Birmingham, and you can see that happening. There's plenty of development going on everywhere in Digbeth. And I mean, not only residential development, it's also, your commercial development. You've got your restaurants coming there. You've got your quirky cafes and your bars. And there really is this new life and new atmosphere to Birmingham with all this development and regeneration coming into it. So, in a couple of years, it's just going to be a complete extension of the city centre, and it's going to be where people want to live, especially, your middle-aged young professionals on the doorstep of sort of the employment hubs. Yes, Chris?
Yeah, just a quick question that's just come in from somebody called Michael Wales. Can these investments come furnished, and would a client have to visit to take handover over the property themselves?
So you can choose whether you'd want them furnished or not. We do have a lettings and management sister company called Complete, and they deal with all the lettings and management of our units on completion. So we do give clients the option to obviously go with them, who are preferred company, or they can choose their own lettings and management company. We do suggest units are furnished because we find that they rent out quicker and less void periods if they are furnished. And Complete will do all of the handover, the snagging, furnish the apartments, all that sort of thing for the client. So it'll all be taken care of.
Thanks, Stacey. Just one more just come in. Sorry to break up your flow.
Okay.
You haven't mentioned purchase price yet, and David Hammond's pretty keen to know.
Yeah, so I mentioned, average price per square foot is 381. But if we look at the range, you're looking from about 198 to 300,000 pounds for the units from 1 and 2 beds.
And again, 65% mortgages. I think that's pretty standard, and we know what's going on with COVID and valuers, etc. But it's fair to say we can get up to 70, or 70s are available. But I always say 65, and if we get 70, then great news. Would you agree with that?
Yes, I think it's always obviously it's always better to be probably a little not so ambitious, because sometimes clients, if you say up to 70, they suddenly tell people you can get 70, and you never know what environment you're going to be getting a mortgage in, right? I mean,
Absolutely.
properties completing in 2020 that launched maybe in 2018 never knew there would have been a global pandemic. So it's important to be a little bit cautious when suggesting those rates. Sure. So let's just go back to the area. We can see Eastern Green there in the bottom right corner, the gold pin. So we just look a bit west of the city by Birmingham New Street Station. In that area there, we've got sort of a new employment hub coming about. So that's where you've got HSBC, you've got HMRC, PwC in there, as well as the well-known shopping centre, the Mailbox, as Grant mentioned before. So that's about 20-minute walk from Eastern Green, very easily accessible. If we look up north to where the purplish dots are up there, Birmingham Snow Hill Station, also a very big employment hub in Birmingham. You've got a lot of businesses in there. It's like it's known sort of as a high-end business district of Birmingham. There you have KPMG, EY. You've got the headquarters of HS2. So big name companies in that area, and obviously a well-established area. And that's about 20 to 25-minute walk away, which really isn't that far. I mean, some people walk sort of 20 minutes to the train station in London. So if you're putting that into perspective, it really isn't that far. And then I think probably the area which is going through, besides Digbeth, a lot of regeneration too, is the east side of the city. So this is where the Curzon station is going to come into play. Obviously, it's going to get developed there. And around that area really is where a lot of money and a lot of investment is going in at the moment. So that whole area is about a 10 to 15-minute walk away. And just south, if you look at number 2 there in the blue, sort of in the middle of the map, is also one of the biggest regen sites, so Smithfield regeneration. I mean, the Birmingham City Council have been talking about this for years now. It's a £500 million regeneration, mixed use, 3,000 new jobs coming in there. So also it's sort of going to be a mini employment hub there, and again on the doorstep of Digbeth. So I think, if you just look at this and when you go to Birmingham, you can just see how the city centre is just completely expanding. I mean, we've seen it expand up north there into Snow Hill. We've seen it expand to the west into the Jewellery Quarter, and now it's sort of heading south. And I think, in the next few years are going to be the Digbeth years, because that's where a lot of money and all this investment, and it's going to be where people want to live. I mean, you don't want to live where you work. You'd rather, work where you work and then have a 20-minute walk where you live, and where there's restaurants and cafes on your doorstep. So, I think we've always loved Birmingham, and I think Digbeth is a great investment story. And I think one of probably the biggest draws of this too is, Grant touched on it in a bit, is Eastern Green is a 2-minute walk away from the new Midlands Metro, which will be built, and that will connect directly with Curzon Station in the east side of the city. It'll be a couple of minutes into Curzon, and then Curzon takes you 45 minutes into London. So if you're a tenant in Eastern Green and you've timed it, you've done the trip a couple of times and you time it perfectly, you can be out your door, onto the tram, into Curzon and into London within an hour. So I mean, it's not many places in London where you also can commute under an hour, right? I mean, so you've got sort of all the opportunities, and a lot of the opportunities now offered in Birmingham that were offered in London, but you're living there for a fraction of the price, and your commute is just as long as you were to live sort of in the outer zones of London, which I think is a massive draw to a lot of people for Birmingham. Sorry, I talked a little bit there, but
That's great.
Got a lot to say about Birmingham.
You're obviously passionate about Birmingham.
Yeah.
And obviously Newcastle, Jeremy.
Oh, okay, perfect. Me again. Sorry. So I think just looking at comparables, it's one of the questions we get asked the most when we launch a new development. Just because the market in the UK is so transparent, it's very easy to hop on the internet, look at Rightmove, look at Zoopla, and suddenly click around and you suddenly think, oh, this is too expensive or this is cheaper. And we just find it easier when we have new developments just to sort of put it in a map and say, these are the most comparable developments, because there's a lot on the market, but not all of it is comparable. You know, there's houses, there's low spec developments, there's developments that were built 10 years ago. These aren't comparable to what we're looking at. So in this map, we try and put the most comparable developments to Eastern Green. So I'll just touch on a few. I'll try to be a bit quicker because I feel like I've talked for a while now. So the one we sort of hear the most is Apex Loft. So if we just look to the right of Eastern Green. So this is probably one of the one that's most comparable to Eastern Green. Very high rise, very good spec, high spec development. They've also got sort of ground rents in line with Eastern Green. So, you know, very, very much like for like. But then if we look at the prices, this is where it starts to differ. So here you're looking average of £411 per square foot for Apex Lofts, whereas as I mentioned, Eastern Green was £381. So I mean, this is also where obviously it stems for the developer to hold his units, because if units are selling here just across the road at 400 plus, why wouldn't he hold these units and sell them later on the market? Because he will make money on them. And then just another one we'll look at is the Axiom, also very, very comparable to Eastern Green, very high spec development. It's been on the market for a little while now, but something sort of, the price here also is from about £419 on average. So again, I mean, yes, maybe closer to the city centre, right? But I mean, how much really is a 5 or 7 minute walk closer worth? Because yeah, on average £419 again compared to £381 at Eastern Green. And then a thing just to note with this too is the ground rents. I mean, as I mentioned, it's something we need to pay attention to. At the Axiom here, ground rents are £250 and £350. So whilst some apartments that you buy will be okay, they'll fall under that threshold of 0.1%, there will be units that will be above the 0.1%, which will present difficulties in lending. And even when you obviously resell one day, you don't want to have this issue when you resell when clients can't get a mortgage to buy because it's suddenly, you know, increased in value. But yeah, that 0.1% still doesn't, it's still over that 0.1%. And then I think just to touch on, I won't touch on all of these, but a developer that we all know from Birmingham is Seven Capital. They've been obviously very prominent in Birmingham. They've been around for a while, and they have quite a well-known development called St. Martin's Place, which is just west of the city, similar to the Axiom, but just a bit more west out there. I mean, they sold that in 2018, and it sold very well. It's all sold out, and that sold for between £440 and £470 per square foot. So the reason I'm obviously bringing this up is because it just shows that Birmingham prices can go 400 plus. They have transacted at that price, and it's sort of, you know, that maybe close to city centre, but the city centre is expanding southwards into Digbeth. So one day those Digbeth prices are going to be at that, you know, 470, 490, and they're just going to go upwards. So securing something at 381 on average, I think, is a very, very good good price and a very good value considering what else is going on at the market at the moment. So I think that's pretty much it from me. Sorry if I chatted a bit much.
Thanks, Stacey, or Holly Willoughby. Thanks very much. That sounded good, and it's got to say, everybody, that all the details for Eastern Green are on the portal. So if you want anything, for the new guys, if you're not too sure, then we're all here to help and answer any questions. And Newcastle, I'm sure, will be going on the portal pretty soon. Just a question that's come in, because we mentioned it earlier on, and whilst people are on, and thanks for staying on. I know you've got Southall coming up, if you haven't already launched it. You mentioned Berlin earlier on, Grant. And I you know, whilst people are on, perhaps it would be a nice idea just to go over what you've got, and just so people have got a good idea. We've got people from all over the world on at the moment, and obviously got clients from all over the world. So, you know, especially with the Brexit, Berlin has proved very, very popular, and dare I say it, mortgage rates. So I just thought you might want to just touch on what else you've got going.
Yeah, is that for me?
Yeah.
Yeah,
Or
sure.
on Germany, and I can.
Yeah, sure. So,
Easily.
yeah, I mean, so if we look at outside of the UK, and yeah, Jeremy, Stacey, feel free to add anything else. So, you know, I think for us this year, Germany will be a continuing focus on Berlin and Leipzig. In Germany, I think I mentioned at the outset, you know, what works so well with Germany is a process. You know, we've done hundreds of transactions, we've done 130 odd million euros of investments. We know the market very well. Stacey's team knows the market very well. You know, the legal structure is great. It's freehold property. The lending works well. We always get the mortgages through. The rental market is super strong in Berlin in particular, and Leipzig, very undersupplied markets. And the tax advantages are there. You hold the asset for 10 years. There's no capital gains tax. So for those looking for diversification away from GBP, you know, it works very, very well as a euro-denominated investment, strong and steady. You know, there's lots of investment going on in Berlin and Leipzig. Leipzig's probably, you know, a city that, you know, we do see a lot of growth over the next number of years, sort of 5% yields from the old sort of communist days. Before Stacey's time and probably Jeremy, but my time and Chris's, you know, it was always a sort of powerhouse of Eastern Europe, and then sort of fell away for many years in the 90s, and now is undergoing a massive renaissance. So it's very much a city on the up. Yeah, Berlin, obviously it's a student capital of Germany. It's a capital of Germany. It's got a very strong tech focus. You've got the Tesla gigafactory going in there. And a number of other sort of high-tech jobs being created across the city. We've seen the new airport finally open, which is very un-Germanic. It's certainly been a long story, but you know, that airport is open now, and the significance long term, aside from the world we live in at the moment, is that that's going to mean that for the first time you're going to fly direct from Hong Kong and all the big Chinese cities into Berlin, and obviously drive a lot of Asian growth. So yeah, there's some pointers on Berlin and Leipzig, and certainly, Chris, we can share the details at the right time with all the guys. And then maybe I'll just get Stacey to add a few comments in terms of Southall and Portugal, and yeah, whatever else you want to add.
So Portugal, obviously our two main cities are Lisbon and Porto. At the moment in Lisbon, we have one development, Bela Vista, still available. So this also has a couple of units which qualify for the golden visa. I'm not sure if some people have seen, but they've extended the golden visa. There was obviously a lot of hype around cancelling it at the beginning of this year, but they've extended to mid this year. And Bela Vista completes 17th, I think, of January actually this year, so in a couple of days. And so that will be all completed, so clients can start their golden visa process and have that all in place, obviously, before they potentially pull that mid this year. And then Porto, we have one of my favorite developments, actually, Literal Living in Porto, right on the coast. A beautiful new build development there, really nice high spec apartments. We have 1 and 2 beds available now. Very, very good developer, very well established in Portugal, big name, big player. And they've actually sold all of their units in their allocation just through their internal channels. So how they do it there is they normally, you know, open up to the employees, families, and then people who have already bought their database. So they sold all, I think it was about, it's quite a few, like 60 units, just purely through internal marketing. So, you know, if the locals are buying into the scheme, that always says a lot about the development and the prices, because if they know obviously what's happening on the ground, which is great. So that's a fantastic one that we have available at the moment. And then the UK, Jeremy, I'll pass to you for the UK so we can change up the speaking.
Yeah, no, fine. Look, I think the most attractive thing about IP Global for our partners and clients is kind of what we're showing now is, it's been truly international company in that respect. So it's not just focused on one city or specializing there. It's focusing on investment and what makes the most money. And so all of these different countries represent something slightly different for each buyer. For me personally, for Portugal is, to get the finance we can get, to be able to get a mortgage at under 1% fixed for a number of years, it's just that for some, that's clients' main objective there, and so that's kind of like unbeatable across Europe in a really safe, attractive market. For Germany, there's the probably the highest returns with no capital gains tax to pay in 10 years in a ridiculously secure market, and the UK is, probably unarguably still the world's main destination for property investment. We still got everyone from Asia, everyone from Russia, everyone from the Middle East and regional areas all want to put their money into what is, comparatively a safe haven status, even with anything to do with Brexit and, COVID, all that kind of stuff. It's the long-term safe market, and we are very diversified within that. We didn't do London for 4 years after Brexit, but we came back at the beginning of last year. Have a great, project to the west in Solarium in Brentford, and then Southall is also in West London. There's this kind of corridor we see going out of London there, which is having some of the most, money spent on it in terms of regeneration areas. And these are little pockets of value for price per square foot. So you can pick up 1 or 2 beds anywhere for this London region, from even if we include High Wycombe actually, which is just outside of London, but commutable. We're talking anywhere from 200,000 up to 500,000 or so, and that's for London, that's great value. And London, has come off a little bit in the last couple of years, but it's a city of 9 million people, one of the 2 biggest financial capitals in the world. It's not going anywhere, so it's still a long-term ambition for us, and we'll continue to do more regional cities as well. With Leeds will come, Newcastle's here now, there's already a ridiculous amount of interest in it, unsurprisingly I suppose with the headline prices for it, but yeah, 2021 is bullish for us with lots of projects coming up, and it's exciting time.
Thank you very much. Guys, thanks for tuning in. Thanks for listening. Zahi just asked a question. All the projects that IPG have got have mortgage availability. So I hope that answers that one. Other questions that came in were answered as they came in, which was great. We've got Tom Bland down in South Africa. We've got Will Page and Michael in Dubai. I've obviously got Jeremy and the team in Hong Kong. So please reach out. There's a lot of information there. You've also got me. And if you've got clients or your clients, you want a one-to-one on a Zoom, then please shout out. Some great opportunities there. And, as I said, right from the word go, I worked with IPG for 9 years and a great track record. And they certainly, I used the word earlier on, trailblazing. They certainly get in there before others follow. So, certainly Newcastle I'd never seen on the menu before. So it's quite exciting to see that sort of stuff. So everybody have a great new year. Thank you to Holly and to Phil. Thank you to Jeremy. Thanks to everybody that tuned in. And please get your inquiries coming in. We need to make get some sales going this year. Thank you, everybody. Thanks, guys.
Thanks, Greg.
Thank you, Chris. Cheers. Bye-bye.
Bye-bye.
Bye-bye.